I'm Jessica Minton for IB Times TV, and I'm joined by David Williams from Strategic Gold, who's going to weigh in about why the price of gold is plummeting. Thank you so much for joining me.
Hi, how are you?
Good, thank you. Thank you for joining me. So the price of gold is on its way to its biggest decline in about 30 years. Why did it start declining in October and then the decline accelerated again in the recent weeks?
In October, the reasons were a little different. I think October, we were coming to year end, people were rotating into cyclicals, into stocks, into bonds, whatever, and they were thinking. Over recent weeks, it's accelerated because it's a deflation trade with the commodity market, and people view gold as a commodity, and so they're selling it really in the commodity trade.
When you look at the average portfolio with stocks, bonds, and cash does lose value. Why is it important to know that with fiat currency, it's good to use to transact business with, but not necessarily as good to store wealth with over the long term?
Well, I think that gets to the question the central bank started in 1913. Fiat currencies are fantastic to transact business because they're liquid, they're highly fungible. It's easy to transact. Gold is different because it's a reserve asset. It doesn't lose value. It hasn't declined by 95% of its value since 1913. So it's a far different animal. You don't want to go to the store and buy a loaf of bread with an ounce of gold. We don't have enough gold around to do that. It's not realistic. However, as a reserve asset, something in reserve to say, okay, I have this much debt stored, and so I need to apply that debt, to retire that debt. That's where gold comes in. That's the store of value that you're seeing as money vis-a-vis a transaction, a currency transactions.
With currency transactions, and post World War II with Bretton Woods and how they tried to change the gold standard, and then when Nixon was in office, and then basically the dollar not exactly being backed by gold anymore. Did that cause a problem in the coming years and coming decades?
Oh, it absolutely caused a problem in the coming decades, and the problem it caused was, what's the value of money? At that point in time, fiat currency, the dollar, or any other currency for that matter, was based on the good graces of the government's ability to tax in order to pay back those dollars. It wasn't based on pure store of value like a gold standard would be. That has evolved over time, and so the governments have been able to print, and that debases the value of the currency. That didn't occur under a gold standard. That doesn't necessarily mean we're going to return to a gold standard. I don't think we're going to, but it does mean that there has to be some combination of the two to rein in governments from their excess debasement of the currency.
Are big institutional sales basically pushing the price of gold higher?
No. The big institutions, I'm not sure they care one way or the other the price of gold. I think the central banks care a great deal about the price of gold because it relates to their currencies, and they don't want to see huge currency debasement too quickly, massive deflation. So they're trying to control the price of gold in certain ways. The big banks use gold as trade, and it's like anything else. They trade it intraday or monthly or yearly just to try to produce profits. In the long run, gold matters for the individual because the individuals can now own gold, and you can act like your own central bank, and you don't have to lose when the big revaluings come. You don't have to be the one on the short end of the stick. You can actually get ahead of it.
What do you think is getting hammered more severely, the price of gold or the share price of miners?
Well, the price, they're all getting pretty creamed today. Right now they're getting pretty creamed. But the price of the miners reflects two things. It reflects the price of gold, but it also reflects the management in those companies. And so any given miner can be up or down depending on the management of that company and the price of gold, the end product. So the miners getting hammered because gold's getting hammered. They can go up or down depending. The junior miners are getting hammered worse than the big guys, just because their cost structure. That doesn't mean to say that they're not a great buy down here. We could be looking at the greatest gold buying opportunity, in the last 15 to 20 years since 1981 or something. So it could be a really fantastic day for all you gold bugs out there.
And finally, Barrick Gold, which is the world's largest gold miner, is down more than about 10% today. Is this a good time to buy shares of gold mining companies?
I personally think it probably is, because these things always get overdone, and so gold mining shares, whether they're going to be profitable in the long run, they're probably way oversold right now, as is gold itself, I think, just on a technical basis. And so it's not bad to take a shot and buy some gold miners. Whether it's long term or not, that depends on the individual and on the investor. But they've been tremendously trounced in the last 2 days, so they're down pretty low here.
Thank you so much for joining me. It was a pleasure talking with you.